Okay, we begin our day with some really strong cues under our belt, and looks like the SGX Nifty is also indicating that the start will be well in the green, buying both from FIs and DIs. So lots to ponder over this morning for the bulls. But let's get it down to individual stocks now. ONGC is the first stock on our radar. Post numbers didn't look that inspiring, but Sonal is best placed to tell us more. Sonal, hi, good morning.
Good morning, Sonia. Well, ONGC reported a big one-time loss, and that's why it reported a loss this time around versus an expectation of a 10,984 crore rupee profit. This one-time loss is around 9,235 crore rupees. They accounted for it for a tax dispute between 2016 and 2022. Other than this also, other than the bottom line, even operationally the numbers were weak. So running you through them, revenues, they were down 6% on a quarter-on-quarter basis. EBITDA was down 20% to come in at 16,340 crore rupees versus a poll of 20,561 crore rupees. Margins contracted to 45% versus 53%, and losses came in at 248 crore rupees because of that one-time loss versus a profit of 11,045 crore rupees. Now their other operating expenditure was up 28% YY, up 36% sequentially, and that is something which compressed the margins as well this time around. So not looking so good for the numbers operationally, and one-time loss on the bottom line also could lead to the stock being in red today.
Okay, thanks a lot for that, Sonal. Well, Ekta joins us to run us through a couple of other numbers, Pharma as well as Sun Pharma. Morning, Ekta.
Thanks for that. Well, for Aurobindo, it was a largely inline set of numbers. Revenue was up 11-odd%. Street was anticipating a 10% growth. Margins 15.5% versus estimates of 15%. Profit 506-odd crores, largely in line with estimates. US sales $370 million versus estimates of anywhere between $370 to $380 million. Injectable revenue was a tad lower than estimates, but nothing too surprising. $72 million versus estimates of $74 million. But other markets also did well. Europe was up around 7.7% year-on-year. API was up around 11.4% year-on-year. Based on these numbers, I expect the stock to be in the green. But do remember, they have their conference call at 8:30 a.m. So more details then. Sun Pharma, possibly maybe a mild red. Interestingly, there was news post the conference call that the company is going to be acquiring Taro Pharma for $38 per share in an all-cash deal. It is expected to be a premium of 41% of the closing price in the last 60-odd days of the average of it. The outflow is likely to be around $300 million for Sun. They will probably look to delist Taro if it goes through. And Taro, remember, has around $1 billion of cash on books, so they would have access to that cash. Separately, company says that they are expecting high single-digit top-line growth for FY23. All businesses are positioned for growth. There is a marginal reduction in terms of the EPS estimates going forward from a couple of brokerages. They haven't really changed their calls or their target prices on Sun. Just expecting a mild red because of the variations from the brokerages, as well as possibly on the news that this about Taro, which came out post the conference call by the company.
Okay.
All right. Ekta, thanks very much. We'll keep an eye on all those names, but let's move on and look at BHEL earnings as well. Vivek is standing by with how it looked. Vivek, hi, morning.
Well, good morning. Capital goods major BHEL, slightly soft Q4 as far as the company was concerned. Revenues higher by 2% on a year-on-year basis. However, the EBITDA disappointed, down almost 14.5%. Margins contracted over 200 basis points for Q4. Profitability on the back of that was down 33%. Now, interestingly, what's actually happened is that in the conference call, the management gave more details. So the order book, is quite steady at over 91,000 crore. Fourth quarter order inflow too was quite steady at over 5,700 crore. Now, interestingly, a lot of analysts quizzed the management about how profitable the latest L2 bid that the company gave as far as the Vande Bharat train sets were concerned. So now what the management has said is they've gone ahead and divided this particular order inflow that they've got from Vande Bharat into two segments. One is the actual delivery, and the other one is the operation and maintenance part. As far as the delivery of the train sets are concerned, what they've said is that margins over there are going to be challenging, and this is a slight negative as far as BHEL is concerned, because they were forced to go ahead and bid lower to match the L1 bid. Now, other than that, what the company is saying is that in the core business of power segment, they are favorably placed in almost 3.7 gigawatts worth of order. So some positive as far as the core business itself is concerned.
Okay, thanks a lot for that. So we'll watch out for BHEL. But a couple of banks came out with numbers post-market hours. There was Karnataka Bank, City Union Bank. Abhishek has the fine print for us. Abhishek, over to you.
Sonia, Karnataka Bank surprised on the negative side as their slippages increased by almost 56% quarter on quarter. So the annualized slippage ratio is at 3.92% for the quarter when compared to 2.4% in the previous quarter. Asset quality has improved because recovery and upgrades have been strong and write-offs continue to remain elevated. The restructured book has seen just a slight decrease, 30 basis point decrease to 5.34% of the loans. Net interest margin is at 22-quarter high of 3.87%. However, the advances growth at 5.6% YOY is the weakest growth that you are seeing in last 5 quarters, and a decline of 4.1% quarter on quarter is the highest decline that you are seeing in last 11 quarters. So weak set of numbers coming in from Karnataka Bank. City Union Bank, the quarterly net interest margin is at 21-quarter low of 3.65%, and the yearly net interest margin is at 7-year low of about 3.89%. So the net interest margin has weighed on the performance of City Union Bank. Asset quality has improved. Gross NPA ratio is down to 4.37% when compared to 4.62% in the previous quarter. The advances growth is weak, 6.7% YOY. So 7-quarter low in terms of YOY growth rate that you are seeing, and they are losing market share both YOY and quarter on quarter. The net interest income is up 2.7% YOY and it is down 7.5% quarter on quarter. The PAT is aided by lower provisions. Back to you.
Okay, thanks a lot for that, Abhishek. Well, ICICI Lombard as well will be in focus as ICICI Bank could be looking to up its stake post a recent disclosure on the exchanges. Surbhi joins us to run us through a quick analysis on that. Surbhi?
ICICI Lombard will be in focus today, and that is because ICICI Bank's board has now approved increasing stake in Lombard by 4% in multiple tranches. They also said that they will acquire at least 2.5% of the 4% stake before September 9th, 2024. Now, just to give you some context on this, ICICI Bank currently holds 48% stake in ICICI Lombard, and post the merger with Bharti AXA, ICICI Bank had to bring down the stake in ICICI Lombard to 30%, and that was before September of 2024. But earlier in April, RBI had allowed HDFC and HDFC Bank, the merged entity, to hold more than 50% stake in HDFC Life, thereby creating a precedent. Now, following which all eyes were on ICICI Bank to whether they will increase the stake in Lombard to above 50% or bring it down to 30%. Now that they have announced that they will bring it above 50%, the overhang of the stake sale is now behind them, and it's a big positive for ICICI Lombard.
Okay, well, we'll keep an eye out on that name. Surbhi, thanks very much for that. TCI Express reported numbers as well. Mangalam has got more details. Mangalam, morning.
Well, those were soft numbers coming in from TCI Express. In fact, because of the fourth quarter numbers, the company's gone ahead and missed their FY23 guidance on both revenue as well as margins as well. So just to run you through the numbers, 9.5% jump in their revenue, so came in at around 326 crores. The EBITDA actually grew a clip slower than the revenue, so just about 8% jump in their EBITDA. That meant the margins actually compressed by about 20 basis points, and we saw the net profit grow by about 7% as well. 38.5 crores compares with 35.9 crores itself. For FY23, the company's reported a revenue growth of around 15%, and this is lower than their 16 to 17% target. They also had a margin target of close to around 17.5 to 18%, and that this year has been around 15.7%. But the big trigger for them will be the fact that they are on a capex overdrive. In fact, last year itself, they did a capex of close to around 125 odd crores. And new businesses that they've opened, which is cold chain and rail logistics, etc., they're targeting the share of new business to be around 25% from about 15% itself. The stock has corrected about 30% from its highs. So let's see whether at lower levels there would be buyers for TCI Express or not.
Okay, thanks for that. Well, Chandar Agarwal, who is the Managing Director at TCI Express, will be joining us shortly to discuss more on the Q4 performance. So you'd want to perhaps stay tuned for that. It has been one of the strongest stocks, created a lot of wealth for investors over the last many years, but this time around a bit on the softer side. But PFC and Sundaram Finance were a couple of other stocks that came out with their numbers. Abhishek is here to give us the lowdown on that. Abhishek, over to you.
Well, Sonia, to begin with PFC, the FY23 net interest margin was at 3.36%. This compares to about 3.55% in this last year. And also the spreads have declined on a YY basis to 2.53% when compared to 2.85% in FY22. So asset quality has seen improvement. The business momentum is really strong. Disbursements are up 133% YOY and about 54% sequentially. AUM growth is about 13.2% YOY and 7.5% 1.5% sequentially. So NII, it's a bit of soft movement that you are seeing because the cost of funds has weighed on the performance. However, lower provisions have meant that the PAT is up 16.2% quarter-on-quarter. Now, Sundaram Finance has surprised with weaker than peer results. So disbursements have declined by 5.3% quarter-on-quarter. It's the only CV financer to see a disbursements decline on a sequential basis when compared to others like Shriram Finance or Chola. So AUM growth is the weakest amongst the peers at just about 3% quarter-on-quarter, while the peers are growing anywhere between 5% to 10% on a sequential basis. Calculation shows that the net interest margin has declined YOY, and quarter-on-quarter, the net interest income has grown by 5.1% YOY, and it's down about 2% sequentially. The PAT, however, is almost flat on a YOY basis and up about 30.4% quarter-on-quarter. The heartening point in the result was the improvement in asset quality. Back to you.
Okay, thanks. That's a very exhaustive list of, how Sundaram Finance performed. We'll also be speaking with the management at 9:30 a.m. today to discuss their quarterly performance. So you'd want to perhaps stay tuned for that. Rajiv Lochan, the MD of the company, will be joining in. So here's a quick recap in case you missed out on any stocks with positive news flow. There's Aurobindo Pharma, ICICI Lombard and PFC, while stocks with negative news flow, ONGC, Sun Pharma, BHEL, Karnataka Bank, City Union Bank, TCI Express and Sundaram Finance. Let's take a quick break. On the other side, Prakash Diwan will be joining in. He has some fundamental stock analysis for us. As we told you earlier, Chandar Agarwal of TCI Express will also be joining in to talk about their Q4 numbers. Stay tuned.